For Global Business Update, Michael Wilson joins us now from London. Good morning, Michael.
Morning, sir. Shares in Asia Pacific. There is this slightly wider feeling that the Fed might not be too aggressive as far as interest rate rises are concerned. I mean, we live in hope, but who knows? Hong Kong index rose 2%, Hang Seng up 4%, mainland China, Shanghai Composite up 1.5%, and also this rather interesting note from the, I don't know how to describe it, the regulatory Securities and Regulatory Commission in China. I suppose it's a bit like the SEC in the United States, but what it's saying is it wants to expedite, as it puts it, the development of a regulated, transparent, open, lively and resilient market. Again, there's a lot of investor doubts as to what China is actually offering right now, and certainly that conference over last weekend did not give any clues at all, really. This chap, Mr. Yen, is talking about the Japanese currency. He says it could plunge further. Mr. Yen is Japan's former Vice Minister of Finance for International Affairs, one Eizuki Sakakibara. And he spent a lot of his life actually guarding the level of the yen. It said it could sink down to 170 against the dollar. He expects the yen to depreciate further as it hovers, as it does right now, on its lowest level for 32 years. I suppose the other side of that, which you're all asking right now, is when would the Bank of Japan start raising interest rates to tackle inflation? That, of course, is the question, and he doesn't answer that in his thoughts about that. Stock futures now, a lot of worries about big tech, which I'll come on to. US stock futures fell after disappointing third quarter results from Alphabet marked a rather sort of foreboding start to big tech earnings this week. The Dow futures fell by 75 points. Shares of Google parent Alphabet dropped more than 6% in extended trading. The search giant missed expectations on both its top and bottom lines. So, Alphabet also reported a decline in YouTube revenue, which has spurred people to actually look at what the future of ad revenue on the internet actually is. So Google and Microsoft hit by a slowing economy. Sales at both of those fell quite sharply. As far as Microsoft is concerned, it marked the US firm's weakest quarterly growth in a decade, and demand for its computers and other technology has weakened, it says. Clearly, consumers around the world are drawing back. That's shown on YouTube, and the reluctance of people to advertise on it. Elon Musk, where would we be without him, has signalled that his $44 billion deal to take Twitter will be closed off this week, i.e. completed this week. He's raised £7 billion from people like Larry Ellison, who's the Oracle co-founder, and also Saudi Prince Al-Wayed bin Talal, plus other sort of asset groups and so on. That's taken the shares to $52. I should remind you that Elon actually was agreed to pay $54 a share when he announced that he wanted to take the company. That was in April. The energy bill to help everybody around the world is too expensive. That's according to the World Bank. The bank's president said COVID support schemes had not been targeted enough towards the most vulnerable, and the debt will take decades to pay off. That's David Malpass. Governments are saying we will take care of everyone, which is just too expensive, he said. Talking about expenses, that takes us effortlessly to the EU and the ECB, which is in talks right now to start shrinking its balance sheet, as you know. It's widely seen raising its interest rates by 75 basis points later in the week. That's tomorrow, 0.75%. This would be the second consecutive, what the markets describe as a jumbo hike in this and the third increase this year. Meanwhile, the German cabinet has approved an investment by China's COSCO on 3 terminals in Germany's largest port, which is Hamburg. To the UK, and the new Prime Minister, Rishi Sunak, stood in front of number 10 Downing Street and said that the UK faces a most profound economic crisis. I think we understand that. He also faces a fairly steep learning curve. He's not only domestically, but he's got to take care of Brexit tensions with the EU, increasingly assertive China, Russia's invasion of the Ukraine, and so on. There was a considerable relief in the EU, if this means anything, that Johnson said that he was now out of the race. Sunak is seen as the voice of reason. He retained Jeremy Hunt as Chancellor, but I've got some breaking news for you this morning that it is entirely likely that October the 31st date for what you might be wanting me to call a mini fiscal event, it is neither of those things. And either way, it's got to be a budget. It will either be postponed until just before November the 3rd, when the Bank of England announces whether or not it will increase interest rates, or it may be delayed and presented as a full budget. HSBC yesterday, we're looking at banks now. Barclays profits beat what was expected there. Unexpected rise in third quarter earnings, strong trading revenues, but, and I think this is a warning from all banks right now, yes, they like the fact that interest rates are rising because they make more money, but they don't like the fact that this may lead to an increase in bad debts. And we don't know those figures yet because obviously these high interest rates have had not enough time to actually register. And finally, as far as oil's concerned, well, the market there is still very, very tight. Prices are inching higher. Constant reminders from this, even from Saudi Arabia now, saying that it's fairly tight and will be tight for the foreseeable future. I think that target of $100 a barrel is probably within sight as we speak. That is the global view this morning.
Right, Michael, great one. Rishi Sunak released his cabinet. Pretty much he's keeping Jeremy Hunt in there. And we're looking forward to that, fiscal budget to be released. Now you're saying it's been postponed. I mean, what are the possibilities? What are the expectations? Because they're deliberately waiting on the Bank of England, and that is instructive vis-a-vis the numbers coming out of the UK. Anyway, the bond yields, yes, on the mend, couple of other numbers on the mend, but it doesn't push away the problems that are still there on ground, those gaping holes as regards, services, providing services, for the UK and all of that. There's a big economic slump in the world. We know that is reflective in Alphabet's figures and all of that. But what's the knock-on effect to, economies that have a lot of young people that depend on these big media organizations for their revenue? Take, for instance, there are a lot of creators in Nigeria that depend on YouTube and the likes to make their living.
Okay, let's just get one thing clear. As I understand it, and again, it may be that this October the 31st budget is going to be delayed a couple of days, but they are not waiting on the Bank of England. It's the other way around. The Bank of England won't be wanting to, actually, for its Monetary Policy Committee to act, and it's got all of that morning of the November the 3rd, rather, to debate that as to see where they're going to go with interest rates. It's going to be up, but it's a question of how much. So I don't think that the government is waiting on the Bank of England. It's the other way around, just to be absolutely clear about that. As far as the global tightening and recession is concerned, yes, I mean, I'm sure that we don't need the likes of the IMF and the World Bank to tell us anything about that, nor do your young entrepreneurs and entrepreneurs around the world. I mean, clearly they depend upon tech services. I'm not just sure whether the advertising slump would necessarily affect them. I think it's the other way around. I think what the slump is showing is that there is a lack of consumer demand. Now that may worry entrepreneurs, but I mean that's what entrepreneurs deal with, don't they? They deal with markets, they deal with demand and so on. I don't think the ads are that way around. I think it's the other way around. I think the ads are demonstrating, the ad weakness rather, is demonstrating to us an overall weakness in the world economies. And also I feel as though the World Bank, saying that the energy help has not been targeted to the most needy is absolutely right. They're not wrong about that, are they? And they're not wrong about it being expensive. And it's going to be expensive for all sorts of economies, including the UK, and not to mention developing countries as well. So it will be a very, very. I have no idea of the detail of the budget. Somehow they've got to get tax increases into that, and they've got to get spending cuts into it, and it's going to be very, very painful indeed. We wait to see. As I say, it may well be delayed. So just to repeat that, it may well be delayed until the decision of the Bank of England, which is sort of November the 4th, November the 3rd, and then November the 3rd rather, and then we're waiting to see whether or not it's delayed altogether and becomes part of a full budget later on in the year, or maybe even at the traditional date for the budget, which is March. But one of the reasons it's being quoted for the delays is that the Prime Minister himself, who, if you remember, was the Chancellor of the Exchequer, wants to have a look at the detail in it. So there we are. A great deal of uncertainty. Sorry about that, but that's life at the moment.
Well, the pound sterling has hit its highest mark in 6 weeks. Investor confidence is building up with the emergence of Rishi Sunak. But the question is, yes, Mr. Sunak says Britain is facing a profound crisis, but that difficult decisions will have to be taken. Now, how long do you think this optimism that has greeted its emergence will last? And then David Malpass of the World Bank saying, oh, you can't help everybody, was suggesting that anyway, you help the people most in need so that you don't have the kind of situation that we had with COVID-19. But I imagine, even using the UK's example, that is everybody that is asking for help. So how do you work the balance to be able not to fall into the kind of ordeal that David Malpass is talking about and that the Institute for Social Research, Economic and Social Research is also talking about. And then as for Elon Musk, yes, the court in Delaware gave a deadline on Friday. Twitter is not saying anything because Twitter is determined to see the case to a logical conclusion. Now, Twitter is hoping that Elon Musk will keep his promise. But will he keep the promise? Will he get the financial leveraging that he's looking for from co-investors and the banks, who have their own costs to worry about too?
I laugh because I don't know whether Elon Musk will keep his promise or not, and neither do the shareholders. There's a considerable amount of relief that at least, I get your point about the court. Maybe that will go ahead, maybe it won't, I don't know. But there will be huge discussions between his very, very big-time lawyers and Twitter. You can absolutely depend upon that over the next 48 hours. No question there. All I can tell you is that the share price rose as a result of Twitter companies, Twitter investors actually liking the fact that at last there appears to be a conclusion about this. Who knows whether he'll keep his word on it? I have absolutely no idea, and nor has anybody else. We go forward in hope, don't we? And hope that this thing may be concluded, and at last we'll get the answer to the real question about this. Doesn't matter who owns Twitter, whether it's the shareholders, whether it be Musk, whether it's you or me. Doesn't matter. How will it make money over the coming time when it's getting further and further grief from regulatory pressure and all those things we've talked about? David Malpass, no doubt he's absolutely right. I mean, the World Bank says these kind of things. It's not quite like the COVID emergency. And again, I mean, who would have thought this? Who would have thought that there are gas tankers queuing up in Europe and outside the UK to unload their gas right now? Because, surprise, surprise, the gas market is looking in surplus at the moment. It's a question of storage. It can't be pumped back into the ground. It's got to be stored somewhere. So, the energy markets are all over the place right now. There is no prediction about that. Of course, I was reading an adjunct to what David Malpass was saying. One of our economic commentators is with me on this, and I take no credit for this whatsoever. But if you want to look for something that isn't going to happen, ask the IMF or the World Bank. They are the most reliable contra-indicators in the market. I take no credit for that. I mean, that's what economic commentators in this country actually say. And what was your first point was about
Rishi Sunak. Rishi Sunak. And the optimism. Yeah.
If you believe in economic orthodoxy, whatever you think that is, then you will like the fact that Sunak is back in power. The markets apparently believe in economic orthodoxy. They don't like surprises, and the bond market is coming out of its sulks and saying, "Okay," and it's lowering the yield on 30-year bonds. Who's to say that what won't happen is that, quite contrary to the expectations of recession all around the world, just supposing there are moves towards a diplomatic solution between Russia and Ukraine, just supposing that were to happen, what effect would that have on sentiment and all the way around the world? Could Rishi Sunak be joining this profound economic crisis, which he was talking about yesterday, at precisely the right time, because we might just be heading for a slight relief? Who knows? It's completely impossible to predict right now. And even the reliable things that we would normally talk about, the bond market, do you think that's reliable now? Or do you think their relief is justified by the return of what they think is economic orthodoxy? Where was economic orthodoxy during the last financial crisis in 2008-9? It was there, but it didn't apply to that particular part of the economy, did it? I mean, these are things which are very, very difficult to predict right now. And the usual indicators, the bond market, the oil price, the gold price, and currency prices, are leading us all astray right now, as are the long-term forecasts. Sorry to be so vague, but I mean, that's basically what's surrounding one's decision to make sensible decisions.
Well, thank you very much, Michael. Now for business updates across the African continent, Rotus Odiri joins us. Good morning, Rotus.
Good morning, Doctor. Good morning, Rufai. Good morning to all our viewers. I only wanted to talk about technology today. That was the focus, but sometimes you just can't escape some of these things. The fuel scarcity that is just hitting us right now, the impact on productivity. Has anyone? No one's attributing this to the floods, are they?
No, they have. Yeah.
No. Well, how? The ports are here.
No, they have. The roads that have been submerged, either in Kogi or in Bayelsa.
Yeah, but fuel
they say has affected the supply chain, right? Some of these independent marketers, they take their fuel and they transport them in tankers.
Yes, but
from one spot to the other.
You import your refined fuel and it comes here to Lagos.
Yeah.
Right, so we haven't been impacted by
with all the tank
floods.
farms, the floods so affected
And then you dispatch
Lagos.
them.
With all the tank farms in Lagos, including the one they just opened there, all the ones in Apapa.
Yes.
Flood now affected fuel.
But Abuja has been having fuel scarcity now for the last week.
For 3
so
weeks,
where do you fit that in?
I'm sure you get the message.
Anyway, look, the impact on productivity is we're already not productive enough, right? So when you now think about what these snarls in traffic do, you wonder sometimes who we offended with all these things, this barrage of
maybe fate.
Is it fate? But why is it all coming together now, Doctor? And the inflation impact. I saw your tweets. Rufai has been asking people how much is a bag of rice where you are, and what the candidates want to do about what is happening with rice costs. You have to think about it's really. Someone asked me to ask you guys about your blood pressure, or how you deal with the barrage of negative news on a daily basis. So do check your health. But on the more positive side, e-Naira. Central
Good
Bank.
one.
I mean, it's growing. It's growing.
Yeah, I'm
right?
happy about that.
So 8 billion naira worth of transactions in the first year. Almost 1 million customers onboarded. About 919,000. About 700,000 transactions amounting to that 8 billion. Central Bank Governor Gordon Emefiele says about 3,305 merchants have been onboarded as well. And well, he said he wants to attain a 100% cashless economy. I mean, that's really ambitious, but he's like, hey, shoot for the, what's he saying? Shoot for the moon and you fall on the clouds or something. So they're trying to get as many of these transactions more. And so I guess the question now is how far, what's the benchmark? How far can we go? Look at there's the cashless transactions, there's the issue of financial inclusion and so on and so forth. And I think, there's a lot of room, runway for the e-Naira to catch on. But look at the digital yuan, the e-yuan. The figures from there, because look, 8 billion naira, I know, official exchange, that's about, I think that's under $20 million. The digital yuan has caught $14 billion in transactions so far. And when you look at them as a benchmark as to how far they've gone, adoption has been massive there because there's, a lot of wealthy people in China that you're transacting, and also the infrastructure and also awareness. And you know, when you think about the amount of the wealthy folks that live in China, a lot of people think about Beijing and they think about Shanghai. Shenzhen is, I mean, this was a fishing community about 40 years ago, has been transformed into one of the wealthiest provinces.
Tell me about fishing community. It wasn't Dubai fishing community.
Right, exactly. And the transformation there. So, you use the one as and what China has done as a benchmark, and Nigeria is on her way, because although there's also the factor that there are a lot more wealthy people there and also a lot more educated there, and then infrastructure and so on and so forth. So, but with e-Naira, you know, again, we've blazed a trail on Africa with respect to where this goes. It's just a matter of increasing the adoption, increasing the awareness. Now, the central bank governor said that there are going to be more announcements made in the coming days. I hear there's an announcement later on this afternoon from the central bank. We're not really sure what it's about. Maybe it's regards to e-Naira. Could be something else, but we'll get that information when it comes through later this afternoon. But you know, this is where we need to go. Still on the tech side of things, Cellulant, which is a Pan-African payments company, they've partnered with MasterCard to try to broaden the reach of their customers making online payments. And look, if you want to link this together, is MasterCard and companies like Cellulant, are they under threat possibly in the future from digital currencies with regards to payments? Think about it, right? If you could think of what you could normally pay for by whipping out your card or making an online payment with a payment service provider or one of these companies, and where the future could go, where you could alternatively use a CBDC and make that payment. So I think they're looking over their shoulders, even though payments right now on debit cards and credit cards are still the primary way through which payments are made and so on and so forth, and of cash as well. They have to make these types of partnerships and make these types of links in order to scale, in order to make sure that they don't get caught up. Because I think the consumer wins in the end on the African continent and across the world with respect to where payments are going. But CBDCs, your e-Nairas, your e-Yuans, and you know, Barbados and other countries that have launched them, with the runway that they have, and adoption, I think, is key, and scale. Your MasterCards, your Visas, and so on and so forth are definitely likely under they'll evolve, and they have to, right? They have to evolve. But just the idea of just being able to pick up your phone and scan something and make a payment, and it's done immediately without using any cards. It's limitless to use.
I mean, one thing has to be said. Yes, they'll evolve. It will take time, but they'll also evolve, because you see the important thing about disruption and technology is that you have to disrupt yourself. Right. So you have to look inwards and implode. I mean, ATM cards are fast becoming very obsolete as far as I'm concerned, you know, but there have been variations. Yeah. Your likes of Apple Pay and the likes, where those cards were still put on platforms on your phone and all of that. So cards are gone in some climes, and contactless, you know, with the power of contactless and cards on your phone and all of that. But when you also look at peer-to-peer, yeah, they're disrupting a certain system, which has to do with linkages and gateways, you know, which companies like MasterCard, you know, do a big deal. But when you look at it also, they have been disrupted equally with companies like, you know, M-Pesa that have also transformed payments in terms of peer payments and things like that. So one thing, I think the future of payments will be, there's going to be a potpourri of different options as regards to payment. Wins. Yeah. The consumer wins. There's going to be a lot of peer-to-peer. There's still going to be a lot of traditional methods like this, which is going to be inter-pathway and gateway payments and things like that, you know, and there's still going to be other forms of iterations. So it's just amazing what will happen, you know, to payment. You know, take for instance, you're talking about one in China, one payment. Look at what WeChat is doing with China, that on your WeChat app, like your WhatsApp, you can make all the payments as WeChat Pay and things like that. So there are many iterations, and as technology expands, it will continue to increase. So you're in for great times. Boy, it will blow your mind. But if you don't innovate, you die. Exactly.
Well, I think it's important what the Central Bank of Nigeria has been able to do in following up on its objective of creating a cashless economy. Yes. Whether you can have 100% cashless economy, it's a process. As the CBN governor himself pointed out, it's a journey. It's not something that can happen overnight. But if you look at 2017 and now, because they started talking about financial inclusion, digital banking, and all this, digital currency about 2017. With 8 billion, with the number of stakeholders that have, joined, with the number of banks that have joined, the platforms and the network of stakeholders that you have generally. I think there is hope, that inclusion will continue, to be deepened, and that more people will embrace, this new innovation. We're in the age of technology anyway, with a lot of innovation, and things will continue to change because the world will never be static. After all, once upon a time, when we used to queue up at post offices and NITEL offices to go and make phone calls. You have to queue up, and every Nigerian then that wanted to use telephone was an expert in hello, because the hello would never go through at once. Now to think that everybody can just use a phone, and that the whole world, is now interconnected. So, we can only expect that things will continue to improve. And, with the CBN saying they will continue to expand, support the fintechs and all of that, I think that there is hope in that direction.
Exciting, very exciting.
After all, when you go abroad, you are not expected to carry bags of money around.
Exactly. That's
a different dispensation.
And in all fairness, kudos to the CBN on the Naira. And it's only going to grow. And the comparison with China, yes, Apple, you forget, China has over 1 billion.
That seems I'm using that as a benchmark. We can get there for sure.
But it can only get better. We can only innovate more. And I'm excited of what we've built, It's going to be possible.